Let's get in one more fundamental voice. Gautam Chowcharia of UBS joins us right now to talk about his sense of the markets currently. Gautam, good having you. Thanks much for joining in. I was reading your notes on the 20th of November, and it's pretty much panned out exactly the way you guys had said, that the event of FDI and retail not being passed is unlikely and just a bit of a minor tail risk. What's the call now? One, as a result of this happening on fund flows, so to say, if indeed your clients were bullish on this, and two, a word on the retail stocks per se.
Good morning. I think the biggest call which we have made is the political economy clearly indicates government committed to reforms path, and that is the big change which happened in September-October period, and that is likely to continue. And this FDI and retail vote is a sort of a confirmation of that argument, both from a government's intention point of view as well as in terms of it being able to push it through politically and in Parliament. So that remains on track, and this will only ensure more visibility in terms of the likely measures which the market is expecting from the government, either in terms of reforms or in terms of administrative measures, ranging from pension, insurance, land acquisition, the National Investment Board, etc. So you will see a lot more activity on that front continue over next few months. In fact, I would even go to still a bit premature, but we would think that even the budget could actually be much more market friendly than what market might be looking at right now. It will be much more fiscally friendly. So this is a clear big positive for markets, for investor sentiment, and this should ensure that the flows which we have seen this year, that should continue for December and even for next year.
So Gautam,
specifically on the retail stocks per se, yeah.
Go ahead.
Go ahead. Okay. Specifically on the retail stocks per se, again, in India we have coverage only on Pantaloon, so that looks positive for us in terms of impact, in terms of sentiment. But the direct business impact on retailing is not really so obvious. The impact on fundamentals of the economy from FDI and retail is much more gradual and much more long term. It's not something which you'll see either in terms of inflows or in terms of improvement in efficiency, etc., flow through over next 2 to 3 years. So this is a much more longer term bet, and to that extent, this is in our view, this is much more a political issue and a way for the government to show that it is committed to the reforms path, rather than in itself it being the solution for all of India's problems. But it will be positive in terms of having indirect benefits in terms of corporate sentiment as well as investor sentiment, and that's a big positive for us.
So Gautam, I mean, what is it that we're talking about in terms of an equity market index performance? 10-15% higher levels, or do you think at the given price of 5900, 5950 thereabouts, the market is at least absorbed in the FDI and retail bit?
From a very near-term perspective, from a 1 month perspective, yeah, it looks fairly valued, but markets do overshoot. If you look at the current multiples and if you look at the fair valuation multiples based on the current growth as well as quality of earnings profile, in our view, 13.5 times seems to be the fair valuation multiple for Indian markets, which implies if you look at a 1 year ahead scenario, it does apply 10-12% upside from current levels, but markets do overshoot. And the more important part, which the visibility is still slightly lower on that, is whatever positive reforms we have seen till now, how it percolates down to the economic recovery. And look, our base case is for a mild, gradual economic recovery. But if these reforms path, if these positive measures lead to a much stronger economic recovery, then obviously you will also see earnings upgrades, and therefore the markets will start looking cheaper. But that is typically the second stage, which we will come to in a quarter or two from now. But at this stage, there is still upside left on the market in terms of fair valuation from a 2 to 4 quarters perspective.
Gautam, just a reiteration of your view on retail now that, I mean, the markets are open as well. You did mention that Pantaloon remains your top draw. The stocks aren't exactly at the levels that they were at maybe a week or 10 days ago. They've moved up maybe 10 to 15%. You think the move by itself is good enough for these stocks to continue the momentum? Because a lot of people speak about money, even if it were to come in, would probably come in over a prolonged period of 1.5 to 2 years. What's the tactical call for the near term as well on some of the retail stocks?
So retail stocks, again, as I said, it's not really direct business impact positive for these companies, yeah, but their assets are valuable, and this FDI and retail opening up possibly increases the value of their underlying asset and franchise. So that is the indirect way of looking at it, and more market-friendly approach rather than a real business impact for these specific companies. So again, so what will drive these stocks from here on would be the kind of news flow or noise we hear around foreign players evincing interest in picking up these stakes in these assets rather than setting up a greenfield project. So that will be the driver for the stock prices for this sector as such.
Yeah. You know, the note again that I'm referring to wherein you wrote about this retail pack, and at that point of time you had mentioned that you were tactically bullish and you recommended adding quality beta. I was just looking at some of the stocks that were your top preferred picks. Most of these have performed. What would it be 1 month from when you wrote the rate? What would the fresh call be on the indices? Are you still tactically bullish on quality beta, or would you now probably switch over the portfolio a little bit?
So we still remain tactically bullish and recommend adding higher quality beta. Again, this is not the time to really go into a more defensive kind of portfolio, which was our recommendation earlier in the middle of the year. The simple reason because the entire reforms momentum and the government measures momentum, that will drive up sentiment among both corporates and investors, and that should lead actually investors possibly to shift away from some of the defensives into more cyclicals, and therefore the quality beta names are the ones which are likely to continue to do well.
Gautam, what's your view on IT, and how much would you read into what Cognizant had to say, day before, saying that 2013 and they are expecting a slowdown when it comes to the client budgeting? Because we did see some, rub off and negative reaction coming in the IT pack in yesterday's session.
Yeah, so IT services, two ways to look at it. Fundamentally, we're still negative on the sector, and in a way similar to some part of it being similar to the reasons which Cognizant cited, primarily because of slowdown in the US and more so in the financial services space, which is the biggest driver for growth and earnings for IT services. So we still remain fundamentally negative. Again, the stocks have corrected, so to say, in terms of valuations compared to earlier higher levels, but still at this time fundamentals do not support getting bullish on them. The second near-term issue could be that if you look at a tactically bullish call and you continue to see flows coming through and you see a mild economic recovery, that should actually be quite positive for rupee from here on, and that will again be a short-term negative for IT services. So we still recommend being underweight on IT services.
Gautam, you do not prefer some of the commodity names, the ferrous metals, so to say, because these stocks are making a comeback, and if so, what is it that you like? Because there are 3 or 4 large stocks which are making a meaningful move over the last 3 or 4 sessions.
So we do like Tata Steel among the ferrous names, and also JSW as a second bet on the space, because we are from a near-term cyclical perspective positive on steel prices. We have seen steel prices go up in China, and typically Indian steel prices react with a 3 to 4 month lag, and we should see steel prices catching up in India also. And again, going back to the same point, if you see a mild economic recovery as well as seasonally the fourth quarter is strong for steel, you will see steel prices going up in India. That should be positive for the steel stocks. So definitely we do like these two names.
What about cement as a pack?
So cement, we have been negative, and again we have been wrong on that. We do like Grasim here at these levels, because the cement, the big issue we have faced from fundamental analysis is that the capacity utilizations have been very low, and despite that you've seen pricing momentum hold on, and so that has been what's been driving the stock prices up. At these levels, the only stock where we see some real good value is Grasim. So Grasim we still like.
Your notes earlier, Gautam, and focusing on the media pack a bit, spoke about you liking Sun TV. By that I'm making an assumption that one, you're positive on the broadcast space, and I think if I'm not wrong, you would have sell on a Hathaway cable. Just dissect this media pack for us. Are you still bullish on the broadcast players, and consequently, are you negative on some of the DTH or the distributors, so to say?
So again, our view has been that digitization is a huge opportunity for the entire India media space. And it's a big positive which will play out over multiple years rather than just next 6 months or 1 year. Again, we had the phase 1 digitization as a big catalyst, but beyond that, this is a multi-year event or multi-year catalyst for the entire media space. And within that, it's much more of a relative call rather than an absolute call. Absolute call, I think all three broadcasters, the DTH as well as cable, they all three benefit. In terms of specific stocks, in terms of what's priced in at current levels and what the upside downside scenario looks like for the next year or so, in that context, relatively, we prefer broadcasters the most, then DTH. And Hathway specifically, we feel that the stock is already priced in a lot of the upside, and therefore it's a sell. So it's purely a stock valuation call rather than a fundamental call on cable.
Gautam, what does one do with the likes of United Spirits now?
So we have a sell. I think market has run ahead of itself in terms of looking at the positives. Obviously, Diageo coming in, you will see a new strategy in place with upside to margins and profitability. But again, what the market is missing is two things. One is Diageo coming in will have a new strategy which will actually lead to lower volumes over next couple of years. Secondly, a lot of the capital infusion from Diageo may not just reduce the debt, which is what the street estimates seem to be factoring in, but may actually go in terms of requirement of higher working capital, which is required for catering to the higher or more premium category of products which Diageo wants to use United Spirits for.
Gautam, what else? Because a lot of market participants are turning selectively bullish on real estate stocks and different categories. Certain people prefer the South-based one, certain people prefer the annuity business like a Phoenix has. One, are you remotely bullish on real estate? And two, if so, what is it that you like from this pack?
So we are overweight real estate, both from a model portfolio perspective as well as from a bottom-up analyst perspective. So real estate definitely is a space which we like. It's not a big part of the index. The market cap of the space is quite low, but in terms of opportunity to make money, this is a very interesting space, definitely. What we like is among the large caps, we still think DLF is the best way to play as a proxy, specifically given companies' efforts to deliver. Beyond the large cap, in the mid cap space, Phoenix, which is again a beneficiary to some extent from retail also, they look one of the better ways to play. And in the office space, Prestige is a good bet for us.
Okay, Gautam, before we let you go, your one top idea, probably not a safe idea, but you mentioned that you're tactically bullish on quality beta. One stock that you would probably safely recommend from a 6-month to a 12-month perspective may have a little bit of a downside risk as well, but the chances of upside are more.
ICICI Bank.
Okay, great. Thanks so much for joining in today and giving us your view. And we'll, of course, see you in the new year as well. Thanks so much for taking the time out today, Gautam.